In August, the payday lender Wonga collapsed. Part of the problem was that the financial authorities had caught up with the payday lenders in general and with Wonga in particular. Wonga was forced to write off a lot of its customers' debts and to compensate others for mis-selling them loans they couldn't afford and for unfair and misleading debt collection methods. Here are some of our listeners who told us about all that.
The letters were basically saying that if I didn't pay, they were sending like doorstep teams to my house and they were threatening bailiffs and removal of goods and things like that.
How much did you owe Wonga by that stage?
I think by that stage it was about 200 or 300, but by the end of the sort of correspondence and letters it was around about 7 or 8.
Because they charge you every time they send you a letter?
That's it, yeah. I mean, they were basically saying that they were a solicitor, and they'd now taken over the debt from Wonga.
But we now know it was Wonga all along.
Yeah.
I needed to buy a new car tyre in 2009 and I didn't want to ask family for the money. And I took out the payday loan to pay off the car tyre. The following month with the interest I had to pay back more, so I was short that month, so I took out another loan. I have borrowed £9,260 since February 2010. With the charges of £2,071, I have paid back £11,301.
In the end, it was the sheer weight of compensation claims that brought Wonga down. Because when customers claim compensation from any payday lender, as well as paying the compensation, the lender has to pay the admin costs. Now, a new not-for-profit website is aiming to pile pressure on other payday companies by encouraging more and more customers to claim. Alan Campbell founded that website. It's called Debt Hacker. Greg Stevens represents the payday lenders. He's the chief executive of the Consumer Credit Trade Association. Alan Campbell, the people who've had payday loans, what might they be able to get compensation for?
I think the first thing is we've got to understand the nature of the compensation. People have been allowed to think that if you struggle and you manage to repay a loan, then it was affordable. In fact, if you struggled to repay a loan, then it was by definition unaffordable. The lady that spoke there a moment ago said she borrowed £9,260. She paid charges of £2,710. Well, if she was to make an affordability complaint on the lender, she would be entitled to get back £2,710. And the lender can't discriminate against her, can't hold it on a credit file, and if the lender disagrees, she can make a complaint to the Financial Ombudsman Service.
Greg Stevens from the Consumer Credit Trade Association. The payday lenders, if they are taken to the Financial Ombudsman Service, they have to pay £550 a case, win or lose. Might the whole sector be brought down by the sheer number of claims?
Can I say, first of all, I represent other companies other than payday lenders across a wide spectrum.
As well? Yes, sure. OK.
I'd like to applaud Alan on his idea. However, we think it might be misplaced. If you look at the current and past regulator and also 2 competition commissions, which spent several years and undertook a root and branch investigation of 2 different high-cost credit sectors, including payday lenders, then many of the instances that's being repeated now are actually being dealt with. And we're looking at things in hindsight, when what we should be looking at is where does the companies go, where does the market go? Alan's idea in terms of, and I quote his a conversation to the FT on the 2nd of September, if just 100,000 people complained to FOS, it would cost the payday lenders $55 million. A loan, win or lose, seems to suggest that he would like the sector to close down by default.
Alan Campbell from Debt Hacker. We've had a statement from another payday lending trade body, the Consumer Finance Association. Now, they said if Debt Hacker's assisting people to make valid claims, then no one will have a problem with that. If it's more about destroying the sector by flooding the Financial Ombudsman Service with questionable claims, then we're not sure how that helps borrowers or helps valid complainants. And we might ask the Financial Ombudsman to use its powers to step in and address a scheme if it was all about that. Now Wonga's gone, Alan Campbell, the people who had the valid complaints against Wonga and are owed compensation, they won't get that because there's no money left to give them. So the people who come to you, Alan, with genuine claims, they would potentially lose the chance to get some compensation, wouldn't they, if everyone piled in?
No, the misnomer in what you've said about Wonga is, first of all, the Wonga business model, as demonstrated by the lady that spoke, was predicated on unaffordable lending. Now, if I was a Wonga borrower just now, I would still, an existing Wonga borrower, I would make a complaint and put the administrator to task to see whether that loan was affordable.
But if there's no money there to pay, you won't get any compensation.
No, but what you would get would be relief on the interest which you've yet to pay, and the loan would only be payable when it becomes affordable to be paid.
Okay. Answer the other bit of my question then. If everyone piles in and a lot of these companies are brought down, a lot of people who have genuine claims for compensation won't get them, will there? There'll be no money left to share.
Well, that's not correct, is it? Because the Financial Conduct Authority, who have tacitly acknowledged the scale of the problem, only last week wrote to lenders suggesting that they should contact customers who have not complained and make redress for unaffordable loans.
Greg Stevens, does anyone know the likely bill? If all the people with a genuine claim apply for compensation, what will it cost the sector?
I don't think anybody knows what that cost is, but I think it all this really comes down to a question of access to credit going forward. There is a real danger if the action suggested by Debt Hacker and other such firms takes effect. We will be looking at a sector which is not being served. Now, even the FCA has said repeatedly that this sector needs to have access to credit responsibly, and that's what the industry has been doing in line with regulation over the last
Gentlemen,
5 years.
We're going to have to leave it there because we've run right out of time. Greg Stevens from the Consumer Credit Trade Association and Alan Campbell from Debt Hacker, thanks both very much for coming on.